Hey, good morning, everybody. It is Wednesday, July 8th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Be sure to check those out. We're going to call those show sponsors today. So if you're here this morning, say good morning. If you are watching on the replay, give me a hashtag replay. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting to you on Facebook and YouTube this morning from Greenville, South Carolina, where we watched a concert last night with Harry Connick Jr. So that was a lot of fun. So anyway, this morning we're going to be talking about oil back in the chat, making a mess of things over in Iran. This situation just doesn't seem to go away, and it's not over till it's over. So we got a lot to cover with that this morning. Make sure that you stick around, and we'll talk about what effect that's going to have on rates and pricing and what effect it's already having on rates and pricing. If you would like a reminder to join us live each day, don't forget you can sign up and get the text alert so you don't miss a moment of the show. hmmr.io/reminder, or use the school QR code over here. And I can see everybody rolling in this morning, so that's a good sign. Also, don't forget to sign up for our daily lock advice, www.ratelockadvice.com, or use this QR code right here. You can also sign up for our text alerts at www.ratetextalerts.com as well. So good morning, Amy Blauser and Tina Bermond, Angela Walters, Rob Stewart, Mike Morano, CJ the Mortgage Pro. Good morning, all. Hope you are having a good day today. I'm going to go ahead and jump in again. Once again, welcome to all the live folks here this morning. Appreciate you being here. But we're going to go ahead and jump in and let's get started. So I'll start off with the technicals, and we'll take a look at where we're at this morning, where things are, and what's going to happen from here. So a quick look at where the technicals are at this morning. You could see that mortgage-backed securities currently are down 8 basis points on the day. However, it was yesterday's late day losses that really hit us hard, and I'll talk about those in a minute. 10-year Treasury 10-year Treasury yield 4.57, and testing levels last seen back in June, but not yet quite near our worst levels that we saw back here in May. So that's at least a good sign if you want to look for anything. So quick recap what happened yesterday. Bonds were steady until about 3 o'clock. You see that here. Everything that we're going over is right here. So bonds were steady, and I wonder if I can't tell. That should be showing everything. Okay, so bonds were steady until about 3 o'clock yesterday. That's right about here. And then you could see this big drop. Remember, when bond prices go down, when mortgage-backed security prices go down, that that is bad for your rate sheet. It's equivalent to seeing worse pricing, seeing your rebate pricing start to drop. So we had a big drop down after about 3 o'clock. What happened at 3 o'clock? That was when we got news that Iran had attacked ships in the Strait of Hormuz, and the U.S. was then going to go ahead and retaliate first by revoking the sanctions on selling the oil. Oh, look, I said revoking, and so did they. Maybe I probably read this before, and it's subconscious. I didn't even know that. But anyway, then we saw that there was a revoking of the sanctions for Iran to sell oil, and oil prices went up yesterday. If we take a look here, you could see that, let me get this just right. You could see that oil prices, here we are, 7.7, which was yesterday. And you could see going into the day, I mean, it had been, pretty flat, right? We had seen oil was just hovering. Brent crude was around 71, 72 bucks a barrel. It was nice and calm. And then yesterday, you could see right here is the first real big spike. We saw that it was there was some buildup, then there was a spike, and now it's all the way up to about $78 a barrel is where it's at the moment. So oil prices are higher, and it's not that bonds necessarily have to chase the tail on oil prices, but you're definitely going to see a reaction. And we're seeing a market reaction to what's going on. So rate sheets today are going to be worse. Yesterday, most lenders did reprice worse. Today, rate sheets are going to be worse. Looking at rate sheets, you would see that basically, we had been down, look at this, 6.52. We were just nice and low as ahead of the July 4th holiday, and things, kind of popped up a little bit. And then yesterday, 6.63. I'll bet you that they're higher than that today. I bet you they were probably even a little bit higher than that yesterday. We did see a bit of a jump. So uh, pricing this morning is likely to be worse. Bonds being down another 8 basis points, on top of where they were at before. So we're all the way down here after pricing came out right around up here. So that's a big difference. You got pricing coming out yesterday, right around 100.21, and now it's around 99.95. So you're down about 25 basis points. That's going to give you a big bump on the rate sheet. So unfortunately, kind of came out of nowhere. Nobody was expecting for us to see continued escalation with what was going on over in Iran, and for that to come back into the limelight. So reprice risk on the day today is moderate. As you can see, bonds seem to be taking things in stride. So we saw the strongest reaction yesterday, and we do see a continued reaction today. But for the headlines, I mean, we're seeing headlines where Trump says that the ceasefire is over, and the truce is over. Now, one thing about the way that Trump says things, he kind of says them off the cuff. And I think that markets are taking it that way. It's not like he called a press conference and said, hey, we're back into this whole thing. But he is declaring the ceasefire with Iran was over. But he said, hey, are people out there negotiating? Well, let them see if they could still negotiate, even though I wouldn't negotiate. It's a lot to kind of go on here, and markets are digesting this. Trump threatening to strike Iran again tonight. Apparently, we did, I think, 80 strikes according to what I've read yesterday, after this whole mess started, and he's threatening to continue to strike again tonight. Final warning from Trump as his remarks draw to a close. Trump says U.S. may reimpose Hormuz blockade only for Iran, which is what it was before as well, where we were kind of stopping their thing. That's the big problem here, is Iran saying that they are the ones that are in charge of the Strait of Hormuz and that they can do what they want with it, and that's an issue. So, by the way, Trump was he was overseas, and that's where he was talking from. Where was he exactly? I'm trying to, because I know he was with the NATO thing, and I forgot where they are. But so he was over here, kind of saying this whole thing that the tentative ceasefire with Iran is done, raising the prospect of renewed military. So he's over in Turkey. To me, I think it's over. You could see him saying, "I don't want to deal with them anymore." The remarks came after the U.S. launched a new wave of strikes against Iran in response to recent attacks. So it's everything that we're kind of seeing here, but we saw a very strong reaction, and now markets are kind of digesting to see where things go next. Oil prices still below $80 a barrel. We want to continue to watch this, because remember, look at how bad it was at 110. 110 is where it spent a lot of time. If we go back and look over the last 3 months, here it is, 118 is where it capped out, but we spent a lot of time right in here around that 110 area. And in the 90s, even in June, as things were improving. So there is room. When you look at mortgage backed securities, we're already down on the lower end of the range. And, this is where we saw kind of a low point back here in June. But back in May, we were all the way down here. And in May, this is May, what was this? May 19th. So when you look at May 19th, you look at where rates were on May 19th. Let's see, May 19th. That was the high point of 6.75, no surprise. And now we're at 6.63, which we're this morning probably like say 6.65. My point is this. We have other variables like what's going on with the Fed, where we could see new worst levels, could push up higher than what we saw last time. So we want to be aware of that. We're not panic locking anything right now. We're cautiously floating for the moment just to see where things kind of go, but we want to be very aware. Now, by the way, those of you that are not signed up for our text alerts, I hope you were signed up for something. And I don't know if other services sent out alerts, beforehand, but I'll point this out real quick and I will show this. Let me pull up my screen. There we go. So yesterday we did send an alert out at 3:14 p.m. as things were starting to get bad, and said bonds are down quite a bit since pricing came out. As oil rises, lenders may reprice worse, and that gave a lot of our members the heads up to protect their pipeline. If we take a look at the reprices that came in yesterday, according to Mortgage News Daily, they started coming in. Even UWM was at 335, and our text alert hit my phone at 314. So that gave a lot of time to protect pipeline. You want to make sure that you are signed up for something like this. If you were not signed up for our text alerts, I don't know why not. They're a whopping $7 a month, and you want to make sure you're signed up for those. ratetextalerts.com, or you can use this cool QR code. I see 42 of you on right now. All 42 of you should be getting our text alerts, so be sure to check those out. Otherwise, I'll tell you more about some of our other stuff another day. I think we've kind of nailed all of it. Let's see if you guys have any comments. I'll leave that up on the screen for a minute. Let's see if you guys have any comments, and we'll go from there. So Ron says, Trump says we'll strike again tonight. Where have we heard that before? Exactly. And I think markets this is just more of the same. I think markets were expecting it. It's kind of, I had that in the captions over here where, let me see, bonds seem to be taking things in stride, but we could see more selling as attacks escalate again. So we're not rushing to lock anything at the moment, because we could see a very quick reversal to this. This is what we've seen happen over there. But we do want to be ready for everything, and you want to be ready to lock in case we need to. Let's see what else you guys have to say on this. Yeah, he was in Turkey for the NATO summit. Thanks, dude. Tammy Mitzgar also telling us that. So what do you guys think? Do you think rates will push up? Do you think we have to worry about rates moving significantly higher? Or do you think this will blow over and chips will keep moving? Remember, markets aren't worried about the actual bombing and military attacks. They're worried about ships getting through the Strait of Hormuz and oil prices. I'm talking about markets and bond pricing and traders and stuff. So Ron said markets didn't really react to the strikes. Pre-market declines yesterday were greater than the pre-market declines today. I agree. They didn't react to last night's strikes. Yeah. So the actual military action, and that reiterates what I was just saying, is that same thing, which is markets don't care if we have military action. We're not seeing a flight to safety that would be expected in the past if there was a situation that was going to lead to longer term military action. What they're worried about is, will there be an increase in oil prices, and is it going to be inflationary, and all of these different things. That's what markets are trying to react to. So right now, we've seen the initial reaction. Rates have jumped a bit on the news, probably seeing about 1/8 of a point in rate higher than where we were at yesterday. But once that's over, we'll see where things go. Markets are getting a large increase in demand from the new Trump accounts too. Yeah, I don't even know how that plays into it. I haven't. I know about them. I just don't know. Kind of all in there. Angela appreciates text alerts. Thank you, Angela. Appreciate you back. So, all right, y'all. I'm gonna wrap it up. And I didn't finish writing the written lock advice yet this morning, so I'm going to go finish that, get that sent out, and then I'm free to go and have some breakfast this morning. So I will see you guys tomorrow. We'll see if things have changed. Again, we don't know exactly where today is going to go. It's a very good day to make sure you are signed up to protect yourself, protect your pipeline. Sign up for our text alerts at ratetextalerts.com, and we'll keep you posted. All right, my friends, have a great one. See you tomorrow. Bye-bye.